So, welcome back to this week's Forex commentary. And, this is Shadow Black. So, last week we talked about DXY on the monthly time frame, weekly, and the subsequent time frames that followed. And we said DXY is bullish. I think I really reiterated the fact that the higher time frame order flow is bullish, and I was speaking about this old fair value gap here, and we had like a closure above this old fair value gap, and that just indicates bullishness in terms of price action because it's an inverted premium array to the left of here. I mean, that was like the last premium fair value gap. After this one, in a way, we were expecting, I was expecting personally, I wanted to see prices run through and stay above this fair value gap. Okay, that itself doesn't tell the whole story, but it just gives you something in price action. Okay, chart remains bullish. And then again, we talked about how I would have preferred they close above here, but that didn't happen. But that doesn't negate bias because order flow suggests DXY is bullish, so data suggests dollar index is bullish. And then again, we said the price action on weekly time frame. We'll check the weekly chart. We said it was kind of like two-sided in the sense that we are having a weekly swing point from here, and if you follow my commentary, you would understand that when I see a swing high form like this, we always expect the next candle to trade into the low of the previous candle. Basically that. Okay, it's as simple as that. Okay, now that being said, I said even if because when the market opened, we saw DXY running into the range, right? And I said that's very permissible. Okay, it's very, very permissible, but you don't expect prices to run through a key resistance like this. And I'm calling it resistance because it's a premium level, it's a bearish order block after market ran buy side liquidity here. So our expectations for markets to run into the range, seek premium, and return into the previous weekly low. So basically last week the draw on liquidity would be the previous weekly low essentially. So, and that's how the market panned out, and we're left with this candle's close and this week's price action. I mean, if you notice, take a look, the first week's trading of December has passed already, and we're kind of like seeing like some bullish volume on the monthly candle, and this in itself doesn't mean anything if whatever is on the lower time frame doesn't support more of this bullish volume, because right now our target would be for prices to reach for the previous monthly high. And not just that, if you take our extension from here down here, okay, I don't think I did that correctly. Okay, reverse, and you'd see that we have like the 0.5% standard deviation, which is apparently the close of this monthly fair value gap. Now, basically this is a fair value gap, and the market would deliver prices into a fair value gap in three ways. Okay, first one is you want to see prices could just trade into it a bit, just somewhat like this, like an entry drill, and respect this gap. The next one you are likely to see is if the markets run into the midpoint of this fair value gap. Okay, so since this is the high and this is the low here, if this is 61.8%, I think 50% is going to be, I think about here, I think there about, let me be sure. Okay, so I'm not talking out of place. Okay, oh, so this is the midpoint of the gap, so they didn't exactly trade into the midpoint here. Do you understand? So then we can give price the allowance to run into the midpoint of the gap to trade into the 25, 10%, or just between 0 to 50% region of the fair value gap, and that's the entry drill. I don't think entry drill gets as much as this. Okay, again, this is a lot of trading. Although it didn't get to the midpoint, but it's still a lot of trading to the fair value gap. How I can categorize the entry drill is just a little bit of trading, like say if this, let me see if this going to the gap, and not exactly, okay, not exactly, it didn't trade into the gap actually, okay, because I read the candlesticks, the high of the candle and all of that. So that's basically 3 ways you can anticipate prices trading to a fair value gap or an inefficiency. Okay, so we've had price trading to the consequent encroachment, and all that is left is the the remaining portion of the fair value gap, and that's why after prices run through the previous monthly high, your anticipation will be for them to completely close this monthly fair value gap. Okay, so that's how to frame target, that's how to frame objective. You have to be very nimble with the way you frame this target. So quickly run down to the weekly time frame. So apparently this week we are seeing the markets respect this weekly fair value gap. And what do I mean by respect? Okay, we ran through the previous week's low and completely closed this weekly fair value gap, and we've now closed inside the body of last week's or the previous week's candle or this week's candle. And this kind of price action just indicates that the market is still trying to walk inside the range of this candle. That's what it means, okay? Because we are at a key level on the weekly time frame. The high time frame order flow is bullish on dollar. Okay, dollar index is bullish. I think we've said that a couple times, and we traded into the previous weekly low. Okay, for context, okay, this is a previous weekly low. We are in a bull market on DXY. I mean, said that a couple of times already, and we're seeing the market run into the previous weekly low, into the fair value gap, and stay inside the range of this week's. So it only means for me, looking at the chart here, is that I want to see prices return into the previous week's high first. Okay, I want to see prices returning to the previous week's high, and if we stay on a closing basis above the previous week's weekly high, then ultimately I think we're having like a bullish swing here, and then we can now aim for the previous monthly high and subsequently the close here. Now, one of the telltale sign here, or one of the things I'm anticipating here, is that we are potentially going to be one-sided for a bit, and one-sided price action really gives you the opportunity to hold trades for the short term or the long term. It depends on how you want to put it. Okay, and if you can get in this week and with the expectation that prices trade into the previous week's high, and I think it will be okay to hold on to some trades, because it could potentially mean that they can reach for this candle and close, like I said, above this down candle would make this the bullish order block. And it would not make sense if you had something on early on here and you manage to hold up to this place and markets close above this candle and you just entirely collapse your position. It's the market validating your bias. Okay, validating your bias in terms of this weekly level, and then it means you can even hold for a longer term, and that's why we're defining our high time frame objective, so that you're not holding for some arbitrary reason. Okay, there's logic, and you're leaning on price action to continually validate prices going higher and higher and all of that stuff. Okay, so the weekly time frame, where it said the markets ran through the previous week's low, is closed inside the bodies of this week's candle, showing us willingness that it wants to walk inside the range. But first off, our expectation would be for prices to trade into the previous week's high, reaching for this resistance again, okay, which is the weekly bearish order block. So it's okay to, if you get something here. Me personally, my job today, like I tweeted yesterday, is that every single week when I go into the market, I want to bet on buys. Because, for example, in the past 3 weeks or 4 weeks, we've been talking about price action, and the market has been delivering exactly how we've called it, okay? And if that's something that happens week in, week out, and someone is saying he doesn't know how to make money, well, I'm telling you that I want to tell you this is how I want to make money. If you don't know, this is how I make money, okay? I want to tell you that, okay, what I do first is to bet on buys. Okay, that's how I want to be trading, or that's how I've been trying to trade, or that's how I've been trading, okay? I want to always bet on buys, because if I'm right 80% of the time, which most often I'm always right, usually within that range to 90% ish. Sometimes, especially when the markets are pretty one-sided, I'm very likely to be correct because I'm well trained in managing expectations, right? So the first thing I want to do when the new week opens is I want to take a bite on buys. I want to tell myself, okay, I'm picking a pair this week, and I'm going to be long on this pair at probably a daily time frame key level, a 4-hour key level. A return into any of this level is either I'm going long or short depending on my weekly buys. And that's a risk, because previously what I used to think about high probability is once you have buyers, you wait for the daily time frame to validate your buys, and then you go in, okay? That's what I used to think. I'm like, once you can define an opportunity, you can create a high probability sort of environment for your trades to thrive in. That's what I used to think. But recently, I've been past couple months, I've been thinking, how can I maximize more of the opportunity? Because there's nothing wrong in what I said previously, but there's everything wrong when you begin missing opportunities, and then you're seeing a huge gap between your analysis and your trading result. And if you're someone like me who is very confident, especially with his analysis, because I may be recording this video quickly, but it takes a whole lot of time to arrive at my own personal conclusion, because I look at it from different time frames, different angles, keep on thinking, and all of those kind of stuff, because I know I'm going to just once I've arrived at bias, wait for market open, and just sit down and just present, run this presentation here. So before, I almost lost my train of thought, so I'm like, okay, since I'm usually right, I'll just wait for the market open, define an higher time frame level, and I'm going to take a bet. What I mean by bet is, I'm bullish. I'm not waiting for a daily time frame to validate me being bullish, because I know statistically I'm usually right on my weekly buys and expectations, so I take a bet there. And as soon as the daily time frame, once that position is favorable, and the daily time frame validates, for example, if we close today and we have like a strong bullish close today, that's the daily time frame validating my buys. And we were already talking about last week's high as a drawn query, which we're going to run through on the lower time frame, and we have that available on Tuesday. Definitely, I know that, okay, I can go in on Tuesday looking for trades. Now, if we check the economic calendar today, we don't have anything on dollar index, but we have something on Tuesday, which is in the Aussie 4:30 a.m. and this is Nigerian time, okay? If you're anywhere in the world, you can just invert whatever 4:30 a.m. is to your own time zone, okay? And it means Aussie is potentially to reach for its own weekly draw of liquidity via this release. I don't know if Aussie is going to run against the high time frame bias. It just depends on price action, okay? And okay, I'm still going to get them on Euro. before CPI on Wednesday and whatever would follow for the rest of the week. So I think Wednesday is really going to get very, very busy. Okay, Wednesday to Friday is going to be very, very busy, especially Wednesday and Thursday, because if we haven't met objective, prices is going to capitalize on CPI to run into the weekly objective. And if the market has what I call appetite to reach for more weekly objectives, then they can utilize the following trading day. Because I said I want expectations for prices to reach for previous week's high, and we understand that markets could even go further than what we expect, and that's why we have all of these objectives into the future. We have them cast already. For example, we're talking about this down candle here. Okay, this is also an objective. So the markets could reach it. You're not going to be expecting a reversal already. It's just basically to stay on the sidelines, or basically that. I mean, for that will be your own safety net. Okay, then if there's anything that forms, for example, even if I want to trade when prices are above last week's high, I'm going to wait very close to the news release. That's if CPI takes prices here on Thursday, for example. I'm just going to wait very close to New York session and see what price action is like, and look at the daily chart, look at the previous day's closure, look at price action before I can validate that. Okay, I know, okay, maybe Thursday is likely to reach for more buy side, and more buy side would be this old level here. Okay, this old level here with more buy side, and before price tips into this level here. So having discussed the weekly time frame on dollar index, here we have the daily chart, and in the daily chart we see prices returning into a daily discount level. And how do I know it's a daily discount? Well, you can simply measure from low to the high here, and let's include the midpoint. Okay, so the midpoint, as anything below 50% is discount. Okay, so that's how we know it's a discount level. And that being said, we said we're bullish, and since we're bullish, this sort of market structure shift, I mean, we had one market structure shift, but I said last week that I would not utilize this as a tourist because we have a resistance level on the weekly time frame, which is the weekly bearish order block. And since we have the weekly bearish order block, this candle here would not mean, or I wouldn't visualize it as some bullish order block, because we have a fair value gap here, and we have the weekly swing high here. So when prices return into a premium, which is the weekly bearish order block, we're likely to see prices run through here. But then you can see the markets actually found resistance here. Okay, got to the OB, rejected, but stayed in the range of this Monday's trading. Okay, and just ran above Tuesday's high, and found sell side here. Okay, so basically basically that. I don't want to say too much story, especially talking about personal experience. A lot of it I'm trying to, I can keep the video short. So now we have a run below the previous week's low, and this is looking relatively like a 3 drive, because this candle here, I think we took sell side here, ran liquidity here inside this fair value gap. I think it's pretty much obvious on the 4-hour time frame. Running sell side again. So so expectation for prices to reach here. This is the previous week's high here, Monday. This is Monday's trading. You can see this high here, relatively equal. We can go through the 4-hour time frame to view the market in even greater details. Okay, so this is what I meant here. Okay, prices run sell side here into this level here, sell side again, sell side again, and sell side again. So it's just been run on stops. And if you want to study price action here, you can see we closed above, we ran through this opening gap. Okay, you can see prices run through this opening gap. And what did I tell you about swing points associated with an inefficiency? So that's basically this swing point. It's high resistance, and if you think about it, there was a daily order block forming here, and markets ran through the daily order block. That's a daily order block, and we say we are bullish based off of the high time from order flow. We're bullish, and market ran through this level, so it's a torso. Okay, it's a torso. We have clean highs here, so peradventure we stay within the range prior to CPI. This is an obvious draw on liquidity for CPI. Okay, we want to see CPI rip through this level, because now we're returning to a near-term discount. We want to run into a premium, but this level here is just too clean. Okay, so if I want to go in this week, first off, and I can see the markets run liquid here, you notice something. We have a down candle here. You can see this down candle here. Okay, this down candle here, this order block. Okay, if markets return into this order block, like a reaccumulation into discount, it could be the bodies of the candle, it could be open, but this is fine. Okay, because right now I'm taking a bet, so because it's not really about the risk to reward, it's just, you know, trying to capitalize on my own edge, okay, in the market. And I could go in here and manage my stops below this level here and expect prices to reach for here first, and subsequent buy side objective, in fact. Okay, because I already said, depending on the closure of this week, this could potentially be an opportunity for a swing trade, meaning from this level here we could be prepped to see the markets reach for, you know, longer term high time frame objectives. Okay, let's have this here. So that's our bullish order block. Okay, that's our bullish order block. This candle here ran liquidity here, and you know there was a change in state in delivery as soon as this candle closed above this down candle. So this is our bullish order block. So my expectation is prices return here into the order block, and we could assume, you know, an entry off of that first. And as soon as the markets continue to give off positive response off of this level, maybe we're making new highs, and you know, discount arrays are offering support and all of that, you know, blending time and price. But since there's really nothing on the EC, I'm just fine with, you know, high time frame setup. Okay, we can now delve into day trading in subsequent days during the week. So basically that's that one. Dollar index and euro. Yeah, I talked explicitly on euro, talking about how this levels here would serve as resistance, how this level here serves as resistance. That was about 3 weeks ago, although I still said we're bullish, but we should be cautious of these levels here. All these old lows are, you know, key resistance levels. Okay, and now, you know, the euro, the swing low, talking about how the markets closed above this volume balance. I said if they return back into the range, okay, we're likely to find support here, and that happened at discount. Okay, that happened at discount, and prices reached for the weekly fair value gap and return back to close inside you know, this previous week's low. Okay, you can look at it clearly. After finding support on the order block, we traded into objective, the weekly fair value gap, and prices closing last week's or the previous week's range. So it means it's showing more willingness or showing unwillingness to rally, okay, based off of the bodies of the candle. Now this particular week showed us willingness to reach for this fair value gap, and after they got to this fair value gap with this candle's close, showing us unwillingness to, you know, probably continue more buy side and stuff. So this week our expectation would be for euro to decline, sell side here, you know, into the bodies of this week here, the rejection block first, and after that we could assume more objectives going forward, because if you look closely, this is a balanced price range. Okay, from this down candle here and here, this is a balanced price range. So 01977. Okay, pretty much. And on the weekly time frame, because I did a lot of talking on the dollar index, so I don't think I need to speak as much. I was talking about price delivery last week. I was saying we don't know if the market would deliver prices here in form of like an entry drill or the midpoint. Now this line, this dotted portion, is the 50% or the 100% fill on this inefficiency. But you can see that I said clearly, if you listen to last week's commentary, how this swing low here would influence the return into this order block for prices to reach for last week's high, okay, or the previous week's high. And having said all of that, looking at the DXY, I think we want to see lower prices on the pound too. Okay, we want to see lower price on pound. I already referenced the level on dollar index. You could just transpose that into foreign currencies and all of that. I'm looking at Swiss francs is one of those pairs I intend to look at this week. We really trade into a weekly discount, an inverse fair value gap, and if you check before our chat, there's something very amusing. Yeah, we have like an inverse, we have an heads and shoulder pattern. Okay, this is very, very clean. This is very, very obvious. This is obvious. So if someone is trading retail concepts, I mean, when prices return to this neckline here, when prices return to the neckline, I mean, that's good for resistance. Not really to throw shades on retail concepts and all of that, but when you see patterns like this that are very obvious to the majority, and we obviously know majority is still sticking to the retail concepts and all of that, but you looking at prices here and you are not trying to look at it from the perspective of pattern, okay? And that's why I'm bringing it up, okay? Because there are lots of patterns in the market, and this is one of them. Okay, you're not looking at the price from the lens of patterns. You are looking from the lens of the high time frame order flow, and the weekly time frame has returned into a discount. So this doesn't seem appealing to you because on the weekly time frame the markets are in a discount. Okay, so if the markets are in a discount, at least the markets will want to settle for an equilibrium of the retracement range. And if we measure from this high here to this low, equilibrium was somewhat around here, okay, above the high of the right shoulder. Okay, so that makes it the draw in the equilibrium. Okay, so just want to keep the commentary brief and sharp. So I hope you found this one insightful. Kindly share with friends, share with the community, and everyone gets to see this. In the meantime, be safe.